Are we about to see stocks squeezing higher, or is this critical level about to fail? On Friday, we saw Nvidia back on the rise again, and we're looking at this VWAP right here. Nvidia able to regain that VWAP, and now it looks like it's headed towards this ABC pattern completion right up here at 149.07. Now, if Nvidia gets that high, what is going to really stop it from making a run towards new all-time highs? Especially when we get this article like this. Microsoft expects to spend $80 billion on enabled data centers in fiscal 2025. Now, if Microsoft's going to be spending so much money in AI, don't you think other companies are going to be following suit as well? Then we come over and look at the fear and greed index. Right now, we see we're sitting at 32, well within fear. Now, earlier last week, we saw the fear and greed index actually dip over into extreme fear. And like a wise man once said, be fearful when others are greedy, be greedy when others are fearful. And we look at the most recent investor sentiment survey, and we can see the bulls are starting to drop off, coming in at a reading of 35.4, while the bears are hanging in there at 34.2. Neutral basically increased to 30.4. Now, just to put this in perspective, the historical average for the bullish side is 37.5 and the bearish side is 31.00. So the survey is leaning a little bit more bearish at this moment. Now we come over and look at HYG versus the SPY. We see the SPY has had this double bottom pattern, and look at HYG. Look at when the SPY was coming down, retesting the swing point right over here. HYG screaming to the moon. Is this giving us a heads up? The shorts are about to get squeezed, and we're ready to see a massive rally out here in stocks. We come over, look at the Dow Jones Industrial Average versus the Transportation Index on the graph on the bottom. And notice the Transportation Index had this declining trend line, broke out, is coming down, trying to retest that. And we can see that Dow also has that little double bottom pattern taking shape as well. Then we come over and look at the yields, and this is going to be one of the big stories we got to keep our eye on. Yields rocketing up again, and it's not just yields going up higher, but look at the steepening of the yield curve. That is very important, something we most certainly want to keep an eye on. Then as we come over and look at the dollar index has been on one heck of a rally on the way up. Notice the dollar index still has this ABC pattern completion up here at about 110.13. Now on Friday, the dollar index had an inside day, meaning the high was lower than the prior candle's high. The low was higher than the prior candle's low, and we got to wait and see, does this continue to resolve to the upside? If so, that could be a little bit of a headwind out here for stocks. And with the dollar going up higher, we also see yields on the rise once again on Friday, having a bullish engulfing candle, and the 10-year yield has a price projection up here at 5.03%. Now, with the yields going up and the dollar going up, the most common thesis would be that gold has to be coming down. We see gold actually on Friday having a down day, but the gold is really trying to hold up through this area right here. If gold comes back down and takes out the swing point, watch out, it's probably going to get ugly from here. And then we have the chance of coming all the way down here towards 25.42 and then potentially down even lower to about 25.02. So it's going to be important. Can gold hold above this swing low or not? Then as we jump over and take a look at crude oil, last week smashing our ABC targets to the upside, making it to the 127 extension. Now, if we look, we've had several consecutive days on the way up. We've had 5 consecutive days up. If we turn on the sequential indicator, we are only on a 7 count. So we still have an 8, 9, which means potentially 2 more days. And we'll see if this puts in an exhaustion area of the market where crude oil starts to work its way back down, maybe towards this minus development area at about 72.71. Now, we come over and look at the SPY real quick. We just closed out the end of the year, the end of the month. And notice we had a candle that basically pierced about 50% of that last bullish candle on the way up. And now already to start the month off, we're already rallying up to the 50% of last month's candle. However, when we start looking at this, let's say on the weekly time frame, we can see that we have these wicks on the bottom right here. If these wicks give way, aka we start breaking below 581, watch out, we're probably going to go substantially lower. But when we look out here on the daily chart, we've been able to regain the VWAP from the swing low right over here, just barely able to get back above it on Friday. Now, if we can get back above the VWAP from all-time highs, that could actually bode well out here for the SPY. We can see the SPY making it up to 598. We can see the SPY making it towards 598 and maybe up towards this minus development area at about 601.97. Now, we can also see we have a double bottom pattern. Now, if this pattern is going to play out, we can basically go ahead and price project where that pattern would complete. If we can get back above the swing high up here at about 602.55, we can see the SPY coming all the way up here to 624.34. However, we still want to be very careful. As we've come down to retest the prior swing low, look at the MACD indicator. It continues to make new lows. This is not something you want to see if you're a bull in the stock market. 4-hour chart, MACD indicator trying to get that fresh cross off that double bottom. But then as we come over and start looking at the 30-minute chart, we had that gap up on Friday and the market just kept chugging and kept chugging along to the upside. Now, when we look at Friday's profile shape, I'm going to classify this as a P as in Paul. And what this signifies is not necessarily bullish or bearish, but if we break above value area high and we start coming back down, then it really opens the door for a retest of the point of control and maybe down here towards value area low at about 589.19. Anything below value area low, the P-shape profile says we're likely going to explore the lower third of the range. And why not just come down here towards gap support, 586.46, and maybe all the way down here, potentially fill in the gap. I want to remind you guys, if you guys trade with prop firms like Apex, My Fund and Futures, or Take Profit Traders, and you want a way to support the channel at no additional cost to yourself, use the links in the description box down below. Now, when we come over and look at the futures markets real quick, we can see that double bottom pattern playing out. And as we come over and look at the weekly profiles, we have value area high coming in at 5978.00. We have the point of control at 5951.00 with value area low at 5923.5. Now, notice this past week, we did close above value area high, and that indicates that it's highly probable this week or next week, we're going to come back and test value area high. Now, there's not a lot of meat on that bone, but it also means we're going to have an untested point of control left behind from the prior week. So do we see the market basically dip down early in the week and then potentially rally back up? Because as we come over here and we start looking at the 30-minute chart, notice on Friday, we just kept grinding on the way up. Now, there are some key levels I do want to pay attention to, AKA kind of the minus development areas. One of them that really has my attention is going to be right down here. And that's going to be an area from 59.70 down here to about 59.66. Now, the daily profiles I'll be using for Sunday night, 59.66.25 will be value area high. Point of control will come in down here at 59.87.25 with value area low coming in at 59.53.75. Now, if we can see the market break above value area high and it holds, then I want to look for higher prices. Now, where might those higher prices come in? That's where we want to come over and look at the weekly profiles. And one of the areas I want to target would be, maybe all the way up towards here. Now, I think that might be a little bit far-fetched. We'll have to wait and see what the news is coming out. But if we went in and pulled our Fibonacci retracement from that swing high down to the swing low, notice we've already come up to the 50% retracement. If we start breaking, we're likely going to come up towards the 61.8 at about 6,018.75. So if we can stay above value area high, that's going to be the next target location I want to focus on for the S&P 500. Now, when we come over and look at the economic calendar, I want you guys to pay very close attention. Last week, what do we see? We had the Chicago PMI numbers coming out, and they came in at 36.9. The last time we saw a reading this low was in May of 2024, and that was when the market was in a decline lower. Before that, the last time we were down here at these levels was really down here during the pandemic. We all know how nasty of a market that was. Now, before we take a look at the QQQs real quick, I want to take a look at the VIX. The VIX was basically down 9.93%. If it would have been down 10%, that would indicate that Monday or Tuesday, we're likely going to have a down day in the market. And you see that nasty red candle that we saw out here for the VIX. Well, now we look at the QQQs real quick. We look out here on the weekly chart. Now on the weekly chart, kind of a bullish candle. We have a hammerish looking candle. We overthrew the low from that bearish engulfing candle, and we were able to get back up above it. Now on the weekly time frame, we can see the MACD indicator trying to cross to the downside. But then when we look on the daily chart, the MACD indicator still looks horrible. We were able to get back above both of these lower swing point VWAPs out here on Friday, and it's going to be critical. Will this low hold? Because keep in mind, we have an ABC target that we've been watching down here at 501.14. Notice out here on the MACD indicator, when we came down to retest this low over here, was the MACD indicator higher or was it lower? It's very obvious. The MACD indicator was lower, showing us at this point, there's no signs the market is trying to firm up off the daily chart. On the 4-hour chart, MACD indicator is trying to hook on the way back up. But then as we look out here on the 30-minute chart, notice the roll effect with the MACD indicator. We had basically on Friday where the market just kept grind, which basically makes it very susceptible to some type of pullback early on in the week. And let's not forget, we have a gap right down here below us. And I know what you might be saying. Well, Mike, there's a gap all the way up here as well that needs to get filled at 529.61. And I got to be honest with you, I really cannot argue with that logic. Now, if we start breaking above the high out here from Friday and we start coming back down, I do want to target the point of control, but I also want to target value area low, maybe even down here towards gap support, and then the gap being filled at 510.12. Then as we jump over and we take a look at the NASDAQ real quick, look at the weekly chart. All right, you can see where we basically overthrew the low right over here. Boom, we got right back in that area and we're able to retest this volume node right over here. Then we made it up towards the next high volume area as well. Now, as we look at this, one of the areas that's glaring at me, and let me know, what do you guys see on this chart right off the rip? What is the area that first captures your attention? Now, for me, if you guys join me during the live stream, we talk about this all the time. And if you don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. But my eyes are being drawn towards this minus development area from 2 weeks back on the profile. I'm going to go ahead and highlight this whole entire area. And then this is going to mark off a minus development area. It should act as a magnet. Now, the thing I'm asking myself is, do we just straight run up there? Or does the market run up a bit, pull back, and then set up an ABC pattern to make it up towards that level? Maybe the market even starts to pull back as early as this week, comes down like this, and then we form that ABC pattern up towards that price point. Now, if the market does start to pull back early in the week, that could set up a head and shoulders pattern. Left shoulder, head, and a right shoulder if indeed the market comes down towards this area. Now, as we look at the weekly volume profile levels real quick, value area high is going to be 21,477.50. The point of control will be 21,386.50, with value area low being 21,212.00. Now, as long as we can stay above value area high, then I would say, all right, let's go ahead and shoot for these higher targets. But on the weekly, if we start breaking value area high, I most certainly want to focus on that point of control that was left behind from last week. Then as we look at the daily charts on Friday, we see we had that massive move on the way up. But one of the areas I want to focus on is going to be this minus development area. That's an area we talked about on the live stream on Friday. That comes in at 21,441, down here to about 21,428. And I wouldn't be surprised if on Sunday night, the market tries to spike up, take out that high, and then if we start coming back down below that value area high, it's going to be a very easy trade for me to target that point of control and then down here towards the minus development area. Now, value area high will come in at 21,552.75 with the point of control down here at 21,513.75 and value area low down here at 21,350.25. Now, if you guys like to learn an easy way to trade time to marks 9 count, make sure to watch this video right here.